Hello, friends, welcome to Wiki Tube channel. Today we will tell you about bad credit mortgage arrears loan. Taking a mortgage is not easy if you have a bad credit history. It is estimated that about 25% of all mortgage applicants do not fit the profiles of traditional mortgage lending companies, with most basing their decision on what they see in your credit file to give you a credit score to provide mortgage or not. If you've ever defaulted on a loan, put a CCJ in front of your name, or if you're bankrupt, it will appear on your credit file and go a long way toward preventing loan companies from offering you a mortgage. Will do. For mortgage applicants who experience trouble getting a mortgage, or any other type of credit for that matter, there is help available. Specialist mortgage lenders offer a variety of loans that specifically cater to the 25% of applicants who have tried and failed to secure a mortgage through mainstream lenders. These loans include bad credit mortgage loans and self-certification mortgages, the latter of which provides a way for self-employed individuals to obtain a mortgage. The ins and outs of bad credit mortgage loans. Bad credit mortgage loans, also known as adverse mortgage loans or credit repair mortgage loans, are designed to give people with poor credit records the best chance of getting a mortgage. Bad credit mortgage loan providers look at additional criteria in addition to your credit history when considering whether to lend you a mortgage. These other criteria vary between providers and will also vary on a case-by-case basis depending on the source of your bad credit history. Bad credit mortgage loans are usually offered at high interest rates. Typically, a variable rate bad credit mortgage product will be 2% to 4% higher than the base interest rate, with the most severe bad credit cases being mortgaged at the higher end of the rating scale. Additionally, applicants will be expected to put in a larger deposit than with a traditional mortgage product. Mortgage loan providers dealing with bad credit mortgages are rarely prepared to lend more than 75% of the property's appraisal. If you can tolerate these restrictions and the fact that mortgage lenders will provide 2 or 2.5 times the total loan amount of your income, then a bad debt mortgage loan is a good thing. Not only will you be able to climb the ladder of proverbial wealth, but you will also be well on your way to establishing a good credit history to pay off debt. If you like the video, please hit the thumbs up and subscribe to our channel so don't miss the upcoming videos. Thanks all.